Hi clients and friends, Mike Brady here. This week I want to talk about deflation, probably define it first and then talk about whether it's good or not. Inflation is something that we might be familiar with because it's what we've experienced since the 1930s. We have not had a period of deflation since the Great Depression. So let me define what deflation is first. It's pretty much the exact opposite of inflation. Inflation is when you have rising prices. Something that costs $3 today costs $4 in the future. Under a deflation, something that costs $3 today is $2 in the future. Now that might sound great if you're the person buying that $3 item, good or service. But it actually can make an economic situation worse. Basically, low demand for goods is due to economic worries and a lack of income, whether that's discretionary or otherwise, pushes prices down. Now that cuts into business profits and results in layoffs and business failures, which increases unemployment, as well as fear and worry about the future and money, and causing a classic vicious cycle. In essence, if companies don't have profits, they can't pay their employees. The employees don't have money because they just lost their job, so they're not buying those goods and services, which means the price of those goods and services have to go down, and the profits of those businesses go down, or they go out of business, which means they have to lay off more people, and it's this horrible vicious cycle. Now, inflation actually rewards debt because debtors can repay loans with cheaper dollars. It acts like a tax on savings because it erodes the purchasing power of the dollar. Now deflation is the opposite. It rewards savings, which is good, and forces debtors to repay loans with dollars that are harder to earn and have greater buying power than the dollars that were borrowed upon. Okay, so one thing to understand is what might be good for you individually might not be good for the economy as a whole. I would argue that having a higher savings rate is good. Having lower debt is a good thing. And but for the economy, we need money to flow, and we have an economy that is based upon the free flow of goods and services, a particular type of consumption. Now you heard me say a couple of months ago that I was concerned about inflation because it's money and velocity. The money was being poured in by the government and it will continue to be poured in, but the problem is people are hoarding that cash, that money. Banks are hoarding it, and so the velocity, the flow from one person to another or from one person to a business isn't really happening. And so we're seeing some of this high unemployment. Right now it's at 9.7%. It's very possible it could be 10% or 11% in the future. I think that there's a very high probability we could see deflation going forward. So you know, this is something to be concerned about. I will continue to talk about it as things unfold. So anyway, I could sit here and talk on and on about deflation and inflation, what the probabilities of one over the other are. Both of them are actually in extremes bad. Both of them are a part of life. So we have to learn to deal with them and what are the particular solutions to them. So if you want to talk with me about this a little bit further, please give me a call, 303-747-6455. The company name is Generosity Wealth Management. I am a registered rep with QA3 Financial. And I think that's it. I will talk to you next week. Bye-bye now.